Hello and welcome to the Market Dominators Real Estate Team podcast. I am the original Market Dominator, Mr. John Spaschek, Associate Real Estate Broker, and I am here with my partner in crime, the number one buyer specialist and Market Dominator, Mr. Scott Catillus, award-winning agent. How are you, my good man?
I'm doing fantastic, John. How are you?
Awesome.
Sweet.
Yeah, it's crazy market we're in, and
Wild.
last week we covered the top 3 things that you need to do as a buyer to prepare to get into this market.
Yeah.
And we shared that number 1 was find the right agent.
Yep.
Number 2 was
lender.
find the right lender. And number 3 was to understand the difference between your needs and your wants. And you very articulately went through and helped educate our general public as to how to prepare.
Yeah.
So those are things we believe in. There are things that are out of our control, though, in this market. And one of those is interest rate. And so on this episode, we're going to talk about interest rate and the effect of interest rate. We often talk about, we've done shows before, and we have videos out there talking about how to measure the impact of interest rate. And it's time for another one of those.
Yeah.
So, but we are coming to you live right now from our temporary location because we are working on constructing a new studio.
Yeah.
So
It's going to be awesome. State of the art.
yes,
Very
we are
modern,
really
very
really
high-tech.
pumped.
Yeah.
It's been constructed actually. We're working on finishing touches like trim and that kind of thing, and then and our studio desk. We're still trying to figure that out, and then all the technology. So hopefully within a month we will be broadcasting from our brand new Market Dominator studio, bringing you this podcast live. We're pumped about that.
Yeah.
So if you are into getting more information about real estate, you can go to our Market Dominators Team YouTube channel. That's right. It's Market Dominators Team on YouTube.
Yep.
And what do we want them to do when they go there?
We want them to subscribe. We want them to like it. Share it with your friends. Okay. You know anybody looking to buy or sell a house? Share it with them so they can gather some information and get ready. Hit the little bell notification so you're notified when we put out some new content, and join us for the wild ride of the world of real estate.
Yeah. So one of the things that we focus on, is our tagline, our slogan, which is we educate, we advocate, we negotiate, and we dominate. That's right. That's what we do at the Market Dominators Team. And this podcast will be no different. We're going to start off with education.
Yeah.
And so without any further ado, let's get into interest rate, because this is really important. When I was, I'm a little older than you.
A little bit.
We've talked about this.
Yeah, just a little bit.
I can remember when interest rates were literally, wasn't really old enough or prepared enough to buy a home, but I do remember when interest rates were as high as 18%.
Wow.
Okay. And
that's high.
Then they were, they went up there for a short time. Then they came back down to about 12.
Still high.
Yeah. So when you're talking about moving interest rates from 18 down to 12, you think that's a significant drop. And it's about a third, about 33% decrease in the rate.
Right.
Right?
Yeah.
But if the interest rates are
18,
at
12.
3 and they go to 5, that's a 2/3, a 66% increase in the rate.
Yeah. You're getting close to doubling. 100%.
Yeah.
You know?
So people, when the interest rates are lower, the movement of the rate has much more impact.
Yeah.
So let's talk about that.
Mm-hmm.
First, I want to preface the conversation by what is really being talked about, which is prices.
Yeah.
Home prices.
Right.
They're outrageous. Home prices are insane. Who would overpay for that house? That's insane. That's nuts. That's crazy.
Yep.
Have you heard that recently?
Oh my gosh, that's all I hear. That's all I hear. I say hi to somebody. They're like, Scott, how's the market? Our house is still going over list price. It's like the two questions go together. How's the market? Are they going over list price? They don't ask me how's the interest rates or this. They just ask me, are they still going over list price?
Yeah,
they're still going over list price. But
so let's get one thing straight real quick. I ended the last show by talking about list price. List price means nothing.
Yeah,
it's a marketing tool. That's it. It doesn't speak to value on the house.
Right.
A home's value can have a starting point based on its recent historical data.
Yeah.
It's comparables, right?
Right.
But if we only based it on that, a house's value would never go up and it would never go down. So there are many other factors that determine a home's value, not the list price. So when somebody says, are they going over list? Well, it doesn't matter if they're going over list. We don't live in the world we did 10, 15, 20 years ago anymore.
No.
Everything is driven by the internet. 100% of buyers will find the home on the internet.
Yeah.
Okay. And if they do a drive-by and they see it, they're going to go home and they're going to pull it up on the internet.
Yeah.
Right?
Absolutely.
They're not searching in the paper. They're not stopping in a real estate office and say, hey, I'd like to shop for a house. None of that happens anymore.
No.
They're on their phones and on the internet.
Yep.
Okay. So listing agents will price houses according to price ranges that are going to pick up the most searches.
Yes.
They don't care where the value is. Let the buyer's agent. We have buyer's agents now. Sitting next to you, ladies and gentlemen, the number one buyer's agent in Western New York, award-winning agent, Mr. Scott Cattell is here. So your agent will help you determine what the real value is.
Yeah.
So there's a little bit of a myth when a house sells for 20 grand over list price. Okay, maybe it did sell for 20 grand over list price. That doesn't mean it's overpriced by 20 grand.
No.
It still could be underpriced by 20 grand. If somebody listed a house $40,000 less than its value. Yeah. And that happens in our market.
Absolutely.
So that's the first thing that you have to figure out. So stop paying attention to list prices, open up your search scope, and then get your agent, which we talked about is the number one thing to do to prepare to buy in this market.
Yep.
Get the right agent.
Absolutely.
To help you determine what the real value is. Okay. Now, with that said, most people do not show up with a check at closing to buy the house, right? They show up with a banker at closing who has the check.
Yeah.
And that is called a mortgage.
Yep.
And you have to get a mortgage. Now, folks, I really want to go through this with you today. This might be one of the most valuable episodes we're ever going to do. Okay. We are in a time right now where we have buyers, okay, not many, but we've got a couple who are being over picky. They're not pulling the trigger when they should. And in the meantime, rates are going up. Now, 3 months ago from today, if you were to get a mortgage and lock in a rate, it would have been 3.772 for a 30-year conventional loan. Now, everybody has a different profile, so it might have been a little higher, it might have been a little lower, but that's what they were quoted.
Yep.
On 3 months ago from today. 90 days.
Not that long.
Today, if you lock in a rate for a 30-year fixed mortgage, same profile, you're going to have a rate of 5.847.
Almost 6.
So you think, it's just a couple interest point rates. Yeah, it's no big deal. Ladies and gentlemen, that is an insane increase in the rate. And I am going to break this down. So talk about what you think. How big is that difference?
Yeah. So listen, I mean, working with our buyers, I can't tell you the amount of people that have been pre-approved. Listen, I want to say everybody gets a house in a month, but sometimes it takes a while. So we've got people that have been pre-approved from beginning of this year, even late last year. And I look at the old pre-approval and it says 3.04. It's basically 3%, right? And you're pre-approved at $200,000 at this rate with these taxes. Cool, right? That's what we've been using as the basis for our search.
Yep.
For the last 24 months, I've been able to not even pay attention to it because the rate really hasn't changed. Once COVID, it boom, it bombed. stayed really, really low. I didn't have to worry about it. Now, these people that are looking to purchase a home, suddenly that 200 number is no longer what you can afford because the rate went from 3 to, as you just said, well over 5. So suddenly I'm having to go back to the lender and say, hey, okay, now this house, what can we offer based on these are the taxes? What's the rate? They've lost buying power, especially if they were really pushing up against a limit, right? Everybody's got a certain limit they can go to based on their specific criteria.
So when the rate goes up,
the buying power
goes down.
Yeah.
Okay.
And suddenly they're going, oh, I can't afford a $200,000 house anymore. And I go, well, you're going to pay X amount more in interest. And the bank says you can't do that. So either you got to now lower your standards because you're buying less house, or you've got to start coming up with more cash to make up the difference. And it's like everybody suddenly, now they're like, oh my God, I got to completely change it. I've got to go in a different route. Like it's very, very different. And it's gone up so drastically, so fast when we didn't have to worry about it, that it's turning people on their heads.
That we have people currently in the process that no longer can buy a home.
Yeah.
And we have people who have to change the homes they're looking at.
Yes. Suddenly the homes that they were saying, oh, I wouldn't consider that 4 or 5 months ago. And that's what they're considering now.
And some of them are in this position because they were unwilling to pay $10,000 more on their offer.
Sure. Yeah.
Because they felt they were going to be overpaying for the house.
Absolutely.
Meanwhile, that same house, even if they got it at the price they wanted, if they bought it at the rate that it's at now, they'd be paying tens of thousands of dollars more.
Right. It's you got to look at the big picture, right?
Yeah.
The total dollars that you're paying for the house and the interest.
Yeah.
Because it matters.
So folks, we are on the Market Dominators team real estate podcast. We're going to break this down for you. And we're going to give you an example here. I'm going to break this down. And I'm going to show you how to see the difference in the power of interest rate for you in this market. Now, before I do that, it's going to sound very negative, but it's reality. 3 months ago, you could have got a rate at 3.7. Now the rate is 5.8. Now, that sounds negative, but I'm here to tell you the rate is not going to stop at 5.8. 2 months ago, the government announced they will have 6 more rate increases before the end of the calendar year. They normally only would raise the rate once a quarter.
Oh, at best. They've barely even hardly raised it for the last couple of years.
Now they have to raise it twice a quarter for now till the end of this calendar year.
Yeah.
This fiscal year. So we're already up like 60-something% in the rate.
Mm-hmm.
You bet you we're going to be selling right over a 100% increase in the rate and more.
Mm-hmm.
And the rate of inflation we're not going to be able to snuff down the rate of inflation. These prices on things we're seeing are here to stay.
Absolutely.
They're here to stay. And now, just today, I heard in the media, in the news, that the current administration is going to be getting prepared to print more money to pump into the economy, which is only going to raise inflation and devalue the dollar, and therefore increase the interest rate even more. So there's nothing that I see that is going to slow down the rise of interest rate. So if you're in the market right now, and although what I'm going to share with you right now is very negative, take heart, because you should be motivated to move quickly.
Yep.
Even if it's not the perfect house for you that you wanted with all your wants and needs, right?
Mm-hmm.
Pull the trigger anyway, because you're going to be living in a van down by the river if you don't. Okay.
Or you're going to keep renting.
Yeah.
And the rent went up $400 a month.
Yeah, exactly.
You're in the same spot you were.
Come on, people, wake up.
Yep.
Trying to help you here. Now, let's reveal this. So we're going to use a typical house. Let's move these cups here, Scott.
Yeah, here. Bring it up. Bring it up.
We're going to bring it up. We're going to bring it up. A $250,000. Let me fix this here.
One second. Do this? Let me handle this. You just tell me when to pull it.
A $250,000 home. Okay. In Buffalo, that's a pretty typical home. Okay. And that's up considerably.
Oh, yeah.
By like $100,000.
Mm-hmm.
Okay.
This is starter home territory.
Yeah. So all these measurements are based on a standard 5% down conventional loan. All right. Now, if you put 5% down, you are going to be financing, taking a mortgage for $237,500.
Mm-hmm.
Okay. $12,500 down as a down payment. You'll need additional money for closing costs. Talk to your agent and your lender about that. Okay. Mm-hmm. That's not this show. All right. Now, if you do that and you come down here,
bend her a little bit.
Let's do this.
Oh, yeah, there you go. Now you got it.
On January 28th of 2022, if you were to do that, the rate was 3.772. And that would have put your mortgage payment on a 30-year conventional loan with 5% down at $1,103, not including taxes and insurance. Okay?
Just the principal and the
just
interest.
The principal and the interest.
Mm-hmm.
Now,
$1,100.
Exactly 90 days later, the interest rate is at 5.847. Massive increase.
Mm-hmm.
And therefore, your mortgage payment would be $1,400.
Almost $300.
$1,400.
Almost $300 more
a month. That's every single year. Like $3,600. Yeah. That's a vacation.
Yeah.
Okay. Well, maybe not anymore, depending on your family. Okay.
That's the hotel.
That's definitely a weekend trip to see a Bills play out of town in a warm city.
Yep.
It's, ladies and gentlemen, understand the interest rate.
Mm-hmm.
Now, let's talk about the power of that, because if you were to factor the cost difference over 30 years, not just your monthly payment, okay, the interest that you will pay on a 30-year mortgage for a $237,500 loan at 30 years at 3.772% would be $159,168. However, today, that same house at the same price, the price didn't change.
Same price.
But the cost to you did. So understand the difference between price and cost. There's a difference between price and cost. Okay? 5.847% on a 30-year loan, you're going to be paying $265,834. That's a lot of money. That's
money.
More than the house.
Yeah. Double the house in interest.
More.
Yeah, more. Right.
The difference between this rate and that rate on the same house at the same price on the contract is $106,000. Folks, are you understanding this? Are you seeing this? Seriously, are you seeing this?
And listen, if you paid $270 for that house and you got it, you're probably pretty happy when you look at this number, right? If you paid $20,000 more to get the house and you hemmed and hawed and I pulled
Actually,
the trigger.
Let's talk about that. That's a very, very good point.
Mm-hmm.
Folks, everybody's complaining about having to pay this money over list price, over list price, over list price. And nobody's measuring the difference between the the cost and the price.
Right.
And when you do, you would have realized, I did the math on this. You could have spent $302,000 for this house. So you could have offered, if you had the rate at 3.772, you could have offered $302,000 to win the house. And still today, even with this rate increase, you'd be breaking even.
Yeah.
The person who would buy it today at $250,000 would be paying the same price as you.
Yeah. That's crazy. That's crazy.
So when it comes time to offers and putting offers together on houses, you better understand how to understand the difference between the cost to you, not the price. Don't focus on the price. Focus on the cost.
Yep.
Okay? Focus on the cost. So that is invaluable. That information is absolutely invaluable.
It's huge. And you know what, John? I made a video on this. I had a very similar situation when I bought my house.
Let's talk about that.
So before I got into the world of real estate, you helped me and my wife sell our starter home and transition to our new home. And funny enough, that we paid $272,500 for it, and we put our 5% down payment down. And the rate at the time was 5.1. And I actually remember you hooked me up with your lender, and I still was like, wow, rates over 5. That's crazy, because that starter home that you sold was 4.1. And I'm like, I'm just going to make sure. I called my credit union. They're like, no, they're over 5. Okay, just make it, So I was over 5%. I bought the house, right? We loved the house. 10 months later, the rate dropped.
Hold on. Let's rewind here a second. Let's rewind. Because you left something out.
What did I leave out?
The fact that you didn't want to buy the home. Okay.
You're right.
Your wife wanted to buy the home.
My wife wanted to buy the home. I had this, I want to say it was 250 in my mind, this number of 250. John, we really don't want to spend more than 250. I was trying to be all fiscally responsible. You showed us.
So you were focused on.
I was totally focused on the price.
Not cost.
And you showed me, well, here's what this price gets you. And I remember being like, this is lame. I don't want this, right? So I remember you showed us, I think it was 5. It was definitely at least 4, might have been 5 houses in a day. And the last one was the one that we bought. And it was also the most expensive. And I remember, like, we were sitting there in the living room, and it's me, you, and Courtney. And I'm like, oh man, I didn't want to do this, but this does definitely check off all the boxes, right? So we get the house, we buy it, we close. I love my house. I really do. I look back now and I see the prices, and I'm like, $272,500. This is wild. Literally, I say that all the time.
So 10 months later after you bought it.
So 10 months later, I mean, we're like literally just getting settled, right? The rates dropped for various reasons, and I refinanced it from 5.1 to 3.375.
Almost 2 points.
Almost 2 whole points. It was huge, right?
So that's percentage-wise, folks. That, again, that's almost like a 40% decrease in the rate.
Yeah.
Okay.
It was enormous.
40-something percent.
Yeah. And the payment went down $250 a month.
So 10 months later, you saved $250 a month.
Yeah.
Okay.
And so, number one, that's great, right? Because who doesn't like to save $250 a month and still have their same house?
Mm-hmm.
And then number two, I remember, and I did a video on it, how I took, if I had kept that higher payment, right, when I bought the house at 5.1, and I transposed it to, okay, well, if I wanted to buy a house now, what would that higher payment equal at a lower rate? Because my rate dropped, right? And it was like, I'm trying to remember, it was like $60,000.
Yeah.
It was huge, right?
Yeah.
And at the time when I was looking for a house, I would have never, you would have had to hit me over the head and grab my hand to sign while I was unconscious to get me to spend over $300,000, right?
Yeah.
So but now I'm looking back and I'm like, man, number one, I'm super glad I did it.
Well, what's your house worth now?
Oh my gosh. Now, last summer, I paid $272,500. Last summer, the one down the road, like 7 houses down, and I live in a subdivision, so a lot of the houses are very, very similar. And I don't even think it's as nice as mine. Sold for $400. It was listed for $350, and it sold for $400. So I'm sitting there going, yeah, $270-$250 was a deal.
Yeah, you didn't want to do it.
But I didn't want to do it, and I almost got in my own way.
You almost got in your own way, but what did you do? You got the right agent.
Mm-hmm.
You used the right lender.
Yep.
And you listened to the difference between your needs and your wants.
Right.
And you went forward.
And I took your advice.
And the advice was, don't
get caught up in this.
Caught up on the price.
Yep.
Focus on the cost, which is your interest rate.
Yeah.
And you're sitting pretty. Mm-hmm. You have a ton of equity. You love your house.
Yep.
You're raising your family. Mm-hmm. You're creating your own, Catillus family legacy.
Yep. 2
beautiful sons and a gorgeous wife. You're very blessed.
Yeah.
Right. And so here we go. Right.
It's awesome.
Now, if you would have gotten in your own way, okay, where would you be? You'd still be sitting in that starter home, that converted cottage that you had that we did well on.
Yeah.
Okay.
And that starter home is appreciated, but it hasn't appreciated $130,000.
No.
Probably $180,000 now if I continue to do the math on my new home. So, the appreciation potential, which wasn't even something that I even started to consider back then.
It's hard to consider.
It's hard to consider, especially in this market. But I mean, that's just a nice added bonus.
And the fact that, not to mention, all the difference in quality of life that you've gotten to live in that house since you've been there now.
Oh yeah.
Versus living in the other one.
Yep.
I mean, come on.
It's huge. I mean,
you have a garage.
I have a garage. My first house didn't have a garage. I have a garage. Got a fenced in yard. We got a dog. I have a fenced in yard for my dog. I mean, my kids play with our neighbors, and I feel safe letting them, go down the street. And I mean, it's just, I couldn't imagine it back at the end of 2018. And now I'm like,
when you get done remodeling your kitchen, the house is going to be very, very, very nice.
Yep.
Very, very nice, and a lot more value.
Yeah.
So, ladies and gentlemen, it is critically important. Stop focusing on list price.
Yep.
Price will help you get in your own way in this market. Understand how to calculate the cost.
Right.
And there's a difference between price and cost. Cost is associated with the actual cost that you're going to pay to borrow the money to buy the house. Now, there is some correlation, right? But you have to get off the price. You just have to. First of all, it's very confusing with list price not really speaking to value.
Yeah.
And the real cost is not going to be associated with the price. It's going to be associated with your interest rate. And we just showed you the massive increase that's happening right now in interest rate is way more than the massive increase in price.
Yeah.
Understand that?
And so far, the rising interest rate hasn't tapered the demand in the market, right? So the ultimate goal of raising the rates is to try to slow things down.
Well,
bring down the inflation.
Bring down the inflation.
Bring down the inflation, right?
But the demand is so high that we could cut off 50% of the demand out there. It's likely to happen, by the way.
Sure.
You double the rates.
People are going to get priced out.
They're going to get priced out. But the demand is still so strong that it's not going to decrease the prices in homes anyway. So if you think I'm going to wait, I'm going to wait so prices will come down. Well, prices could come down $50,000 on that house. You're still paying more.
Yeah.
You're going to pay more.
Yep.
Because the cost of the interest rate to you is going to be more than $50,000. Do the math.
Yep.
And if you don't know how to do the math, reach out to us. We will help you do the math.
Absolutely.
Reach out to your lender.
Yeah.
You could find us, by the way, on the Market Dominators team on the YouTube channel. Please like, subscribe, hit that bell button so you can get notifications when we go live. And you can get all kinds of valuable content that we're bringing to you, the consumer, to help you win in this market. Because what do we like to do? What's our approach?
We love to educate. We love to advocate. We love to negotiate. And then lastly, we love to dominate.
That's right. That's what we do here at the Market Dominators. So we are absolutely thrilled to bring to you this content. Okay. So last week's show, find the right agent, find the right lender, know the difference between your wants and needs. This week's show, understand the difference between price and cost. Okay. Know how to measure the difference between price and cost. Understand what's going on with the interest rate, which is your number one cost factor, and what's going on with it, where it's at. It's on an incline that has gone up way faster than any price on any home has gone up. And know prices on homes have gone up significantly all over the country. Okay. But nothing's increased more than the interest rate has in the last 3 months. Okay. And that has an immediate direct impact on you as a buyer getting a mortgage. Know how to leverage your position for your family's sake. This is generational wealth you're talking about here, folks. Understand how that impacts you. Okay. So without any further ado, we are the Market Dominators, and we seek to bring you all of this content and all of this information absolutely, totally free. But if you're looking to sell, if you're looking to buy in any market in the country and you need help, you could reach out to us. Our phone number is right here. By the way. 716 area code. You might not be able to see that.
570-3298.
Yeah, you can get me directly. And if you're looking to buy, we will hook you directly up with Scott here, number one buyer's agent in Western New York. And if you're looking to sell, you will see me sitting at your kitchen table helping you to get your house ready. Okay. Where you can score in this market, actually. And we can do that for you anywhere in the country. Okay.
Absolutely.
Anywhere in the country. So we are very, very grateful for our clients. We love our clients. We can't wait to soon be bringing you this podcast in a brand new studio in the future weeks coming. But until then, go Bills.
Go Bills.